So, you sent this over to me the other day,
Hmm.
and it really got me thinking,
Yeah.
this mathematician's perspective
Yeah.
on President Trump's tariffs,
Right.
this is coming from an international trade and economics organization.
Exactly.
And I really thought this would be a good one to do a deep dive on because,
Absolutely.
we hear all these sound bites and we see
Yeah.
the headlines,
Hmm.
but I think it's really important for us to kind of unpack what the real-world consequences of these tariffs are.
Right.
Specifically, how they might ripple through your life as a listener.
Hmm.
You know,
Absolutely.
what are we talking about here when we look at the immediate impacts
Yeah.
and then the long-term shifts?
Right.
And, crucially, how they all connect.
Yeah.
Because this isn't just abstract economics.
Yeah. No.
This analysis really highlights how consumers,
Mm.
businesses, big and small,
Yeah.
even government decisions,
Oh, yeah.
are all part of this really complex picture.
Absolutely. And I think, what this mathematician does so well is sort of break down that complexity and
Yeah.
help us see beyond just the surface level,
Yeah.
arguments or discussions. We're not
Yeah.
just talking about, like a simple up or down in price.
Yeah.
This is a deep dive. We're
Right.
going to be exploring, those initial economic jolts, the more gradual changes we might see over time,
All right.
and how those short-term pains could either pave the way for long-term gains
Right.
or potentially, create some deeper challenges.
Yeah.
I mean, it's about understanding the interconnectedness of it all, for you, the listener.
Right. And so let's get into those immediate jolts then.
Okay.
The analysis flags consumer prices
Mm.
and your purchasing power as a primary short-term concern.
Yeah.
And, it seems pretty intuitive. Like,
Hmm.
tariffs make imported goods cost more.
Absolutely. And the analysis really digs into how directly this can hit your wallet,
Right.
Think about your weekly grocery bill. A lot of those items or their components, likely cross borders at some point.
Right.
And when tariffs increase the cost for importers,
Yeah.
retailers, they have a strong incentive to pass those costs along to you, the consumer,
Of course.
and often quite quickly.
Right.
In fact, there have been a number of studies that have shown that for many categories of goods,
Yeah.
the price increase at the border due to tariffs translates almost directly into a higher price on the shelf.
Wow.
But what's particularly concerning in the analysis is the potential for a more lasting impact.
All right.
You see, if these higher prices contribute to broader inflation,
Right.
and if your wages don't keep pace,
Yeah.
which is, a real worry given stagnant job growth and existing debt burdens for many,
Right.
then your real purchasing power erodes.
Yeah.
And that's a significant short-term hit that can have long-term consequences
Right.
for financial stability.
And it's that squeeze on household budgets.
Exactly.
That really resonates with me. Because it's like, okay, higher prices for essentials mean less money for everything else.
Right, exactly.
Now, the short-term turbulence isn't just about what we pay at the store, is it?
No, it's not.
The analysis also points to stock market volatility.
Mm-hmm.
Why is it that, like, a tariff announcement just seems to send shivers down Wall Street's spine?
Well, the mathematician emphasizes that tariffs introduce a significant element of uncertainty into the economic outlook.
Right.
So for companies that operate across borders,
Yeah.
whether they're importing components or selling overseas or both,
Right.
tariffs can disrupt those really carefully planned supply chains
Yeah.
and potentially reduce their future earnings.
Of course, yeah.
What's fascinating here is the disproportionate impact this can have.
Okay.
The analysis highlights that smaller businesses in particular might lack the resources and the established networks
Okay.
to quickly find alternative suppliers or navigate these complex new trade rules.
Oh, that makes sense, yeah.
So this uncertainty leads investors to become more risk-averse, potentially triggering sell-offs and wider fluctuations in stock prices,
Right.
what's often referred to as increased volatility.
Yeah.
So you might see bigger swings in your investment portfolio
Oh, wow.
and just a general feeling of unease in the market.
Yeah.
This sort of potentially bearish sentiment where investors kind of anticipate a downturn.
So the uncertainty rattles the markets, especially for companies with those international ties.
Right.
And that kind of ripples out beyond just investors, doesn't it?
It does.
The analysis also suggests that in the short term, we might even see a slowdown in overall GDP growth.
Yeah.
So how do these tariffs kind of put the brakes on the broader economy like that?
Well, the analysis lays out a pretty direct chain of events.
Okay.
If tariffs increase costs for businesses that rely on imported goods,
Right.
or if they face retaliatory tariffs on their exports,
Yeah.
their profitability can suffer.
Yeah, of course.
And the mathematician suggests this can lead to some tough decisions,
Yeah.
delaying investments, scaling back operations. In the worst case scenario, even facing financial distress and potential closures.
Wow.
And of course, that has a knock-on effect on employment,
Right.
potentially leading to reorganizations and layoffs,
Yeah.
which then directly impacts household incomes
Of course. Yeah.
and can reduce overall consumer spending, which is
Right.
a major driver of GDP.
Yeah.
The analysis also touches on the possibility of businesses becoming more hesitant to hire,
Right.
further dampening job creation.
Yeah.
So it's a cycle where increased costs and uncertainty can lead to reduced economic activity.
Right.
However, the analysis does also note that governments might try to step in with measures like tax breaks or subsidies
Right.
to try to counteract these negative forces and encourage continued investment and innovation.
Well, it's like a balancing act in a way.
Yeah.
You've got tariffs creating a drag.
All right.
And then the government might try to push back with some incentives.
Exactly.
Let's pivot to the longer term now.
Okay.
A key stated goal of these tariffs was to strengthen U.S. manufacturing and bring back jobs. So what does the analysis suggest about the likelihood of that happening down the line?
This is where the analysis introduces a really crucial element, automation.
Right.
While the idea is that tariffs would make domestic production more competitive compared to imports,
Right.
the mathematician points out that businesses facing these higher costs
Yeah.
might be just as likely, if not more so,
Yeah.
to invest in automation technologies
Right.
rather than hiring a large number of new workers,
That makes sense.
especially if labor costs in the U.S. remain relatively high.
Yeah.
So while we might see some increase in domestic production, the analysis suggests that significant job creation in manufacturing
Right.
isn't a guaranteed outcome of tariffs alone.
So it's almost like the robots might be the real beneficiaries in a way.
In a sense, yeah.
And the analysis really emphasizes that if the goal is truly to create jobs,
Yeah,
there needs to be more to the strategy than just tariffs.
right.
Like those retraining programs we were talking about earlier.
Exactly, because if we look at the bigger picture of long-term manufacturing success,
Yeah.
the analysis underscores the need to equip the workforce with the skills that are actually in demand
Right.
in today's increasingly technology-driven factories.
Of course.
Without investments in education and retraining,
Yeah.
there's a real risk that even if production shifts back to the U.S.,
Yeah.
those jobs might require a different skill set
Right.
than what's currently available,
Of course.
leading to a mismatch and continued unemployment in some sectors.
Yeah, it makes sense.
So the analysis really suggests a more holistic approach is needed
Right.
to ensure that a resurgence in domestic manufacturing also translates into meaningful job growth.
Not just about where things are made, but who is making them
Absolutely.
and what skills they need to have.
Yeah.
Now, let's think about the global stage for a second.
Okay.
The analysis also touches on the administration's aim to rebalance global trade and address what we're seeing as unfair practices by other countries. So what are the potential long-term implications for our relationships with other trading partners?
That's a really important question, and the mathematician highlights that while the desire to create a more level playing field is understandable,
Yeah.
the strategy of imposing unilateral tariffs, acting without prior agreement or consultation with other nations,
Right.
carries some significant risks in our very highly interconnected global economy.
Yeah.
The analysis points out that international trade, it isn't a one-way street.
Right.
It's about U.S. businesses accessing markets around the world to sell their goods and services as well.
Right. Of course.
And if our trading partners feel unfairly targeted by these tariffs,
Yeah.
they may retaliate with their own tariffs on U.S. exports,
Makes sense.
potentially harming American businesses and workers
Yeah.
in those export-oriented industries.
Right.
So the analysis suggests that while the goal might be to encourage fairer practices, the method could inadvertently lead to trade disputes and a weakening of overall global trade relations, which ultimately could be detrimental to everyone involved.
So a trade war isn't just a headline.
No.
It has real potential to disrupt these established economic relationships
Absolutely.
and hurt American businesses trying to sell overseas.
Yeah.
Now, finally, the analysis looks at this long-term goal of making the U.S. economy more resilient,
Okay.
less vulnerable to those global disruptions.
Right.
How do tariffs play into that strategy?
Well, the analysis suggests that the idea behind the tariff strategy is to encourage more domestic production and to diversify supply chains
Okay.
so that the U.S. isn't as reliant on imports from any single country
Right.
or as vulnerable to disruptions in international trade.
Yeah.
However, the mathematician again brings up the influence of labor costs and automation
Right.
as key factors that will determine how successful this strategy is in the long run.
Right.
The analysis reiterates that simply imposing tariffs doesn't automatically create resilience.
Of course.
It also requires investment in domestic capabilities,
Right.
support for industries that might be negatively impacted during the transition,
Yeah.
and perhaps most importantly, a recognition that complete self-sufficiency in every sector
Right.
is likely unrealistic
Yeah.
and could come at a significant cost.
Wow.
So the analysis cautions against an over-reliance on tariffs as the sole tool for achieving economic resilience and suggests that a more nuanced approach, considering the vulnerabilities that might still exist,
Okay.
even with tariffs in place, is necessary.
So pulling it all together, this analysis paints a picture of tariffs as a really complex instrument.
It does.
We're looking at potential immediate headwinds.
Yes.
Your grocery bill could go up, your investments might see some bumps, and overall economic growth could slow down.
Right.
The hope for long-term benefits are a stronger domestic manufacturing base,
Yeah.
a more balanced global trade landscape, and a more resilient economy. But the analysis makes it clear that these long-term gains are not guaranteed.
No, they're not.
They depend on a lot of moving parts,
Absolutely.
from the pace of technological change to the reactions of our trading partners.
Right.
It's a lot to think about.
It really is. And I think the mathematician's work really highlights that, tariffs are not a simple fix.
Yeah.
And that the journey from potential short-term pain to desired long-term gain
Right.
is fraught with uncertainties
Yeah.
and requires careful consideration of a wide range of factors.
Wow.
It's a balancing act with significant trade-offs, and different segments of society will undoubtedly experience the impacts in very distinct ways.
So as you've been listening to this, thinking about how tariffs might affect the prices you pay, the stability of the markets you invest in,
Yeah.
the broader shifts in the economy,
Right.
it really forces you to weigh the potential short-term costs against those hoped-for long-term benefits.
Absolutely.
It's a complex equation.
With a lot of unknowns.
And I think this brings up a really critical question for each of us as listeners,
Yeah.
Considering all those interconnected factors we've discussed, the role of automation, the responses of other countries, the potential for government intervention.
Right.
What specific indicators would you be watching to determine whether these tariff policies are ultimately achieving their intended long-term goals for the U.S. and the global economy?
Yeah.
What would signal success?
Right.
And what would raise those red flags? It's definitely something to keep in mind as we continue to follow these economic developments.
Thanks for joining me today for this deep dive.
It's been my pleasure.
I hope you all learned something, and we'll see you next time.